Hey everyone, welcome back to the channel where I speak about my investments and track my progress. In today's video, I'm going to be speaking to you about the ETF VIG. It is the largest holding that I have. I have about $30,000 invested, which gives me about 189 shares. So on screen are the holdings of the ETF. So let's understand what the ETF is all about. VIG stands for the Vanguard Dividend Appreciation ETF. It's an exchange-traded fund offered by Vanguard. The fund's primary objective is to track the performance of the Dividend Growers Index. So from the index page, the index is designed to measure the performance of U.S. companies that have followed a policy of consistently increasing dividends every year for at least 10 consecutive years. The index excludes the top 25 highest yielding eligible companies from the index. So it doesn't include high yielding stocks within that constituency. So we see that the top 10 holdings are very diversified based on industry. We have Microsoft, Apple, ExxonMobil, United Health, Johnson & Johnson, JP Morgan, Procter & Gamble, Visa, MasterCard, and Home Depot. So going over the top three, we can see that the fund stays true to its purpose. Microsoft, that's top holding, has grown its dividend for the past 18 years with a relatively solid growth rate. Apple has grown its dividend 9 years, so it's a little off, but its growth rate is also pretty decent as well. And ExxonMobil has grown its dividend 20 years with a somewhat minor growth rate, but I guess that the purpose is to keep it diversified as well. And when we aggregate all of these holdings together, what we get is an ETF that generally increases its dividend over time, year over year. It varies, of course, by quarter, as dividend companies typically do. And to give you a rough graph, what we see is an ETF that consistently grows its dividend over time. So this gives you the power of compounding growth, and the amount you invested earlier, it's going to give you a greater yield on cost as the time goes by. So basically, by holding this ETF, investors can potentially benefit from the future dividend growth. Now, these dividend companies often exhibit stability in their earnings and financial performance, making them reliable choices for long-term investments seeking stability in their portfolio. So when we compare VIG to the Vanguard VOO S&P 500 ETF, you can see that VIG's top holdings are a little less concentrated. It has Microsoft and Apple at about 4.6 and 4.3%. Whereas VOO has a much higher weighting with these two holdings. We can also see that Vanguard S&P 500 ETF, like the S&P 500, is much more weighted to technology. Quite a few of the S&P 500 companies are related to technology. We see Apple, Microsoft, Amazon, Nvidia, Google, and Facebook. Whereas the VIG top holdings are much more diversified based on industry. So what we get with the ETF VIG is an ETF that is more industry diversified than the S&P 500, that has a history of growing its dividends slightly more so than the Vanguard S&P 500, and that offers less volatility over time. So had you have bought VIG 10 years ago, you would have a slightly better yield on cost than the S&P 500 ETF currently. So taking a look at my brokerage, the last dividend the ETF paid me was on March 29th, and it paid me $137. The next dividend should be due sometime around the end of this month. So the final question would be, is this a good ETF to hold for a long period, and how does it compare to the S&P 500? And we see over the past 10 years that the fund actually performed less than the S&P 500. So the S&P 500 beat out VIG by around $4,000 with $10,000 invested over 10 years. However, it had a lower max drawdown and a lower worst year. So if you're concerned about volatility, VIG would probably be a better choice. If you're concerned about growth, VOO over the long period may be the best choice. And if you're not concerned about volatility, you can go with VOO. And this outperformance probably is due to the overweight of tech and tech had a great 10 years. Alright everyone, that's going to be it for today's video. It was a relatively short video for a relatively straightforward ETF. If you enjoyed this video, I would be greatly appreciated if you leave a like or a comment on this channel, and I'll catch you all next time.